Christof, thanks very much for inviting us here to your stand at MIPIM. Just give us an update, if you can, on the current market view and the outlook from the point of view of Aareal.
If you look at MIPIM, I don't know how much you've gotten already of the scent here. I think it's a very adequate mood, first of all, which I think is kind of describing where the industry currently stands. We're seeing in North America somewhat, subdued trading volume, still at a very high level. Europe also more subdued volumes at this point in time in terms of trading, but still at an all-time high when you look over the past 5, 6, 7 years. China, Asia, mixed picture depending on where you are, but also rather on the lower side than it has been for the past years.
And you've obviously got a global role, and I know that Aareal's been particularly active in the US lately. What's driving that, and also how do you see the comparison with the European market?
If you look at the US, you take the geography of Germany, you can fit it physically into California. It just shows you the size of the US economy, the US geography. So whereby we would be scrambling to count 10 cities across Europe having much more than 2 million inhabitants, I think, it's much more permanent in the US. So it's a very big market. Also, I think from a risk-return perspective, it's a very attractive market for us because gives a lot of different array of different property types, very much situated. We've been there for 20 years. It's not that we've decided today we're going to do the US, right? So it's just a continuation with the same people that we've done over the past years, and it looks very much attractive compared to many other countries. Especially also if you look at Europe, the same way, very competitive, but within Europe you will find the pockets where you can do a good risk-reward relationship.
And how do you see the market from a risk perspective? Are you seeing a more defensive strategy from investors?
From the financing perspective, for a first point, we, for example, were able to keep LTV at about 58% for last year, on average, across all of the countries that we've been active in. If you look at the industry from an investor's point of view, they very much ask themselves the questions, I have X money to invest, so I can either try to buy 20 properties which are not there currently just because of the missing volumes that are being traded. Second thing is, at what point in time is the return more attractive? Is it a 50% LTV, 60 or 70% LTV? Also depending on the investor, but most investors currently tend to have a lower leverage, also paying tribute to the fact that yields are lower, so debt serviceability is still very much in focus for them.
And in terms of the structured property finance sector, what are you seeing as the key trends? Are you more positive about any particular sector, or is it more to do with the specific asset?
I think we've been known to be very much a sector specialist. So besides the more common office class, we're also very much active on the hospitality side, as you know. Very much active also on the retail side. Despite all odds, retail I think has a very much a place in the industry. However, that picture is changing. Hospitality has always been a big factor for us with our specialist groups in Wiesbaden headquarters working together with our local branches. We've also entered a new asset class last year into student housing, which we found was very attractive to us from a risk return. Again, somewhat probably situated between a hotel and a residential building. So, and focusing there by much more than a city on cities that have the right universities to go with them. So we still like the true commercial real estate as our core competency.
And what's your outlook on the market if we're looking at 2019 going into 2020?
Starting with 19 very quickly, I think 19 will see much of the same trading volumes that we've seen in 18. Look, the industry is, I think, at a very good level, and I think it's plateauing to a certain degree. It's been very stable for the past month in terms of yields, purchase yields, financing parameters. If you look in 2020, at some point in time, people have exchanged a lot of assets, so people will look to develop a lot more. I think development will be coming up during this year. It started last year much more in focus and really developing for a need, because there's a demand rather than just developing to make a potentially higher margin on things. We're not very much on the development side, so we'll be the ones hopefully taking on the already developed assets. And again, we're very much looking forward also this year and also in the 2020 of playing what we call our USPs, and one of them being, we can do large portfolios across many countries in Europe in a very efficient manner. And there's a trend that people are buying platforms or amalgamating their assets into platforms to then potentially sell them on.
Thanks very much for sharing your views both on the European market but also on the global market. Thank you, Christof.
Thank you very much. Appreciate it.